Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Bamakshi Doria and with me is Vivek Iyer. Good afternoon to you, Vivek. But when we started off the day, it was a good start. Unfortunately, we are not where we thought we would be today. The midcap end of the market, though, holding up well.
That's right. Good afternoon, Bamakshi. Remember, it's expiry day, a couple of hours. Rolls going on quite strongly is what we gather, especially as far as derivatives are concerned. So overall, but still, we are managing to hold out with 0.25% of a gain. We have quite a lot lined up on the show, a couple of managements as well. So let's start off with the top headlines. Stocks continue to trade range amidst uncertainty over Trump's tariffs. IT and metals notched some gains, while energy and auto drag midcaps relatively outperform.
A U.S. court scraps tariffs imposed by Trump under the International Emergency Economic Power Act, calling its use unjustified. Even as the Trump administration files an appeal, experts point to other sections under which tariffs can be imposed, keeping the uncertainty alive.
Welspun Corp gains after reporting a strong set of Q4 numbers. EBITDA is at a 5-quarter high and the order book is at 19,553 crore. The company also announced new greenfield facility in US with an investment of $125 million.
Deepak Nitrite rallies after a better-than-expected fourth quarter. Margins expand 150 basis points while the phenolics business drives revenue growth. Management says domestic demand showed early signs of recovery.
Cummins India trades with gains on the back of its fourth quarter numbers. Revenue grows 6% on a year-on-year basis. The company also has met its double-digit growth guidance for FY25.
Well, 24,761 thereabouts is where the Nifty is at. Of course, we've seen some bit of recovery coming from the day's lowest point, but we're still about 100 points or so off the day's high. As far as the mid-cap end of the market is, what it's doing, it's actually up almost 0.3%. The advanced decline ratio has now moved in slightly in favor of the declines. Let's also look at what the sectoral indices are doing this afternoon. It's the metal index that is leading the gains. We have obviously Welspun Corp in focus after the company reported its EBITDA, which was at a 5-quarter high. Jindal Stainless as well is seeing a good session today after Jefferies has initiated a note on the company with a buy rating target price of 800, and Vedanta also some relief coming in from the NCLAT. That stock is also seeing an uptick. But we have a lot of movers in the mid-cap end of the market, and we have our special segment, Mid-Cap Movers. Hormas is across the wall to take us through the mid-caps that are moving around in trade. Good afternoon, Hormas.
Good afternoon, Bamakshi, and it's almost anticlimactic, right? When you're expecting an action-packed day, it hasn't transpired so far, but never say never. You still have the second half of the day coming. But we start off with some of the losers then in the broader markets. There aren't many, but there are some of them. Olectra Greentech continuing to grind lower, 4% lower on that stock. Polymedicure, Nugent Software also trading lower with losses of close to 3%. But there are earnings reactions where there are some losers as we speak, and Bharat Rasayan is one of them. Has recovered from the low slightly, but still 7% lower. Cummins India, after a very strong earnings call, is up 7%. Welspun Corp, multiple internals that were positive, as Nigel has been highlighting through the day, 9% higher there. And Avanti Feeds, off the highs of the day, still holding on to gains of around 3%. Realty is seeing some buying in today's session after a very interesting note from Morgan Stanley, where it has upgraded stocks like Prestige Estates and DLF, both of them at the highest point of the day. Prestige, in fact, will even report results today. And Anantraj is at the highest point of the day too, 5.5% higher here. On the stocks, on the volumes front, if we take a look at those names, then you'll have Castrol, of course, the Bloomberg story that was earlier in the day about a potential stake sale. Asahi India and Deepak Nitrite too, trading with gains of anywhere between 4.5% to 6% on very strong volumes. And lastly, some stocks that are bucking the trend, if you could call it that, in today's trading session in some of the gainers. MMTC continues to move higher. Vari Energies has just received an order which is around about 1,500 crore rupees, which is around a 6.5% gain here. HEG and ITI too building on to the gains that they have seen earlier in the week. Back to you guys.
Thank you so much, Hormas, for joining us and giving us a sense of how exactly stocks are moving as far as the broader end of the markets are concerned. Well, as we now slip into a short break, we are excited to unveil our brand new global business news channel, the all-new CNBC-TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in into CNBC TV18 Prime at 12 noon for the Global Reset and the Global Lens at 8:30 p.m.
Welcome back. You're watching Midcap Radar on CNBC-TV18. Let's pull up the chart for HEG as well as Graphite. Both of these companies are electrode makers, and in today's trading session, they're trading with good gains. When you look at HEG, it is up almost 6%. Graphite is trading with a gain of almost 4.6%. But, we have a management lined up on the show. Insecticides India is in focus. The stock is gaining in trade after reporting a good set of Q4 numbers. Revenue surged by 31% and margin came in quite healthy. Management expects to launch at least 6 more products this year. To discuss this and more, we now have Mr. Rajesh Agarwal, who is the Managing Director at Insecticides India, joining us. Mr. Agarwal, good afternoon. This is Vamakshi. Thank you so much for joining in with us. I'd first like to start off by asking you about the kind of growth guidance that you have for FY26. You've given a double-digit growth guidance. Now, you only managed to grow the top line by 2% this year. What gives you the kind of confidence that you will be able to achieve this double-digit growth guidance?
If we talk about 25, it was a very disturbed year. The rainfalls were very erratic. Number one. Number two, we had a lot of launches. Like if you see, we had about 12 launches which happened in the last fiscal. But all these launches came almost at the fag end of the season. So we did not get the time to establish these products, but the response for these products is very nice. So much so that our largest range, which is we call it Focus Maratna. So these are the products which sells in large volumes, and they are the premium products for the company. So we are adding from last year introduction 4 products to the FM range, which means they are going to be the star products for this year. And we are launching 6 new products. They are also very interesting molecules. So we are very, very confident that this year we should be able to register the top line growth as well as the bottom line growth.
Sure, and the double-digit growth, this is now a very broad range. So could you narrow it down for us? Would we expect maybe, say, high teens or would it be early teens kind of double-digit growth that you're factoring?
Like when I have to give the projection, I'll always say 10% should be good actually. So it will be 10% plus. So now let's look at the season and the achievements. So since last year has been very subtle growth, so I don't want to give very aggressive numbers. So we'll retain with 10% plus or lower teens or whatever you may say. And let's see the future.
Okay. Mr. Agarwal, let's talk about some of the partnerships that you have with a few multinational corporations. You have partnerships with Nissan, OAT, Agrio, as well as Momentive. Especially when it comes to Nissan, we understand that it's almost 1/4 of the top line. So how is the partnership progressing? What has been the kind of launch pipeline as far as new molecules are concerned? And what has been the response, especially in that particular segment? FY26 onwards, what will be the contribution from Nissan and the other 2 large partnerships?
Nissan is a very important partnership we have. We have lost almost half a dozen products from Nissan's stable, and many of them are still patented. And they are number 1 products in my segment. Like if I talk about Shinva is the top product in my segment and giving us the gross revenue of more than 150 crores, followed by Hachiman, which again from the stable of Nissan. It's doing very good. Almost 70-80 crores of revenue comes from Hachiman. And then there are lots of products actually which are doing very good. Pulsar being another 50 crore product. Then we have Izuki. So all the products from Nissan are doing good actually. And now we are introducing Altair, which is a new rice herbicide. So yes, this year is, since it's a start year and it's a little expensive molecule, which is going to control the weeds, which are very difficult weed to control, and the farmer has to invest a lot of money in doing the manual weeding, and he spends about 4,000 to 5,000 rupees per acre in doing this manual weeding after using the multiple sprays of the chemicals. So we are going to eradicate those weeds with this product. So I'm very, very confident that this should turn out to be a very good product, particularly for the areas where the weed population is very high and water availability is little limited. So these are the areas of central India, eastern part of the country and southern part of the country. So we are going to go very aggressive here.
Mr. Agarwal, can you quantify the opportunity for us, the contribution, as far as FY26 is concerned from these molecules?
This year we'll go subtle. We'll go with a target of about 15 crores in mind, but we'll be multiplying it by at least 2 or 3 in the next fiscal.
Sure, and you managed to achieve your EBITDA margin guidance of double digits. So EBITDA margin at the end of FY25 stood at 11.1% with these new launches that you're doing, along with the products that you launched last year, which were not able to ramp up last year. This year, what is your EBITDA margin guidance?
So guidance will be the double-digit guidance, but it will improve further. Because of this, the entire growth, what we are projecting is going to come in 26 is going to be from Focus Maharatna and Maharatna products, which means that the profitability is going to be better and will surpass the last year. In terms
And
of
how much better would that be?
I don't want to give the numbers again, but we'll surpass those numbers and first quarter will be evident.
Mr. Agarwal, if we understand, you classify your products into three categories, the Focus Maharatna, the gold as well as the silver. Now, when you're talking about, the first category, which is the Focus Maharatna and Maharatna, almost 50% of the total top line is coming from this particular segment. We understand that is also a higher margin segment. Going forward, what is the ideal mix for you? Are you looking to ramp up the contribution to the top line from these two categories themselves? And what is the visibility that you see?
Yeah, definitely. That is our vision, actually. We want to take it to 70%, but it will take 3 to 4 years.
And that timeline? Yeah.
And 3 to 4 years from here. So we have already achieved 61% in this fiscal and we'll be improving it further in this FY26. So we should be able to improve it by 2 to 3% actually from here. 61 to 63, 4, we should be able to do actually this year.
Sure, and when I look at your working capital days, they have actually gone up to 122 this year as compared to 109 last year. So when do you expect this to normalize? And, how much reduction can we expect in the working capital in FY26?
Actually, the inventory increased a little at the end of the year because it was a strategic move because we had to introduce a lot of products and we were also starting up the new plant. So we had to arrange for the raw materials. It increased little extra. I know that, and we are working on that, and we have already started working on economizing everywhere actually and improve the efficiencies, particularly in the working capital, in the inventories, in the projects, everywhere we are working. And the good news is we are getting the permission for starting the Dahej plant, which was long overdue. So we are going to start that plant also from the month of June. So things will improve. You will see some improvement happening in Q1 itself. And I think by Q2, end of Q2, by August, we'll normalize 100%.
Understood that. Currently, in terms of capacity, do you have sufficient capacity on stream? What is the current capacity utilization levels at various facilities? And plans to ramp up any capex plans?
Yes, capex plans are always there at Insecticides India. We have just completed our expansion at Dahej, and still there are some small things which are in process. So for the current fiscal, we are targeting the expansion at Sotanala, Rajasthan, where we are going to spend 100 crore rupees in our expansions. Majority of it is going to go in Sotanala, and then there is some small maintenance capex which is going to go across the plants. So at the moment, we are 100% utilized because we are under pressure. The rains have started before time. The pre-monsoon showers are good. The expectation from the market is very good. Huge demand for herbicides, and it is very difficult to meet out that demand at this moment. So the plants are working day and night, 24/7 at full capacity.
Sure, and you were also looking at registrations in the US and other countries, if I'm not wrong. So by when will you be completing these, and what is the opportunity size that is there for you? And the export contribution currently very minuscule, 5%. Where does it go?
Insecticide India is basically a domestic market company, but we are investing a lot on the registrations. So we'll start our America business this year. So expected the trial quantities are going to go in this quarter itself. And after this, the success of the trials, then we'll start it commercially. So I don't want to give big figures for the international business, though we are going to start some business in Japan, some business in America, some business in some other countries. So, but still our guidance of 200 crores, which is there for last 2 years, we are not able to reach there in exports. We are going to keep it same. So though my team is little jittery with 200 also, but we'll keep it at 200 crores because I don't want to downsize my target of exports, but I'm very, very confident that we'll be meeting it with the domestic sales, whatever are the gaps. And in totality, company will have a 10% gain. And of course, we are investing a lot on these registrations and expect a good success out of it. Though the timeline, it may, if we don't achieve 100% in this year for the export business, then export business will cross 200 crores in the next fiscal for sure. That I'm confident.
All right. Thank you so much for that, Mr. Agarwal. Wish you luck for the year ahead. But as we slip into a very short break, here is some good news for our viewers. India's business news leader is now only a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Welcome back to Midcap Radar. Well, let's shift focus to Enviro Infra Engineering. The company reported their Q4 numbers. Their consolidated revenue surged over 30%, while EBITDA rose 12% on a year-on-year basis. Manish Jain, who's the managing director at Enviro Infra Engineers, joins us now to discuss this and other things as far as FY26 outlook is concerned. Thank you so much for joining us, sir. First up, when we met last time around, you gave us a guidance of for FY25 to be slightly northwards of 1,000 crore. You've gone ahead and achieved that, almost a 5 to 6% beat as far as your own guidance was concerned. Now, going into FY26 with the order book in hand, what is it that you can guide the street towards in terms of top line, in terms of EBITDA, margins, as well as bottom line?
Good afternoon, and thanks a lot for having me on the show. I'm glad to inform that the numbers which we could foresee in our last meeting, we have been able to outdo those numbers. Our top line has been 1,066 crores. Our margins are still better because we had given a guidance of 22 to 24% EBITDA margins. We have been able to achieve EBITDA margins of more than 25%. And then our PAT margins are also better. These are at 16% plus. So the profitability is 177 crores for the entire financial year FY25. Going ahead, our order book present is 1,180 crores. We have bagged another 200 crore worth of orders in the current financial year. On the positive side, we have submitted bids for around 5,000 crore plus projects. So we are having a good success ratio of more than 40%. Still, if we see conservative success ratio of around 20 to 25%, so we can have a good order inflow into the company. We foresee an order book of around 2,500 to 3,000 odd crore coming into the company in this current financial year. So on the basis of this new bids which we have submitted, the order inflow which we expect, we maintain the guidance of around 35 to 40 odd percentage growth in the company for the current financial year as well, along with the profitability margins that we peg at 22 to 24% EBITDA margins. So we maintain the same growth. I will continue with this.
Sure. And when we look at your margins, then you're expecting a much lower margin as compared to what you've posted this time around, right? Because this year you've managed to post 25% margins. So you're saying that will not sustain going forward?
No.
And what would be the
Our guidance for the margins have ever been 22 to 24%. We have been able to achieve those numbers, still better numbers in current financial year, and definitely we look forward to achieving similar type of margins in future as well. So the guidance factor that will always be in the range of 22 to 24% EBITDA margins. So this is how the efficiencies that get derived, we have been able to achieve still better what we can foresee.
Okay. The other thing you want to understand from you, Mr. Jain, is that especially when it comes to the water segment, and a whole host of other players, have gone ahead and flagged off this particular concern, is the issue of receivables. We understand that you two currently are facing this particular issue. So what is the on-ground scenario? Are there worries, especially in terms of receivables that you're getting? And are there any delays when it comes to execution?
If you see the cash flow statement of the company, there has been a significant improvement. From a cash flow of minus 80 crore pre-tax of cash flow from operations, it has turned positive. And now we are around 25 crore cash flow positive, cash flow from operations pre-tax. So that says that there has been a substantial improvement and the cash flow position is substantially improved in the company. It is right that there has been some cash flow issues in the JJM projects in this current financial year. However, we were operating in other segments as well, wherein under Amrut 2 and Namami Gange, we were executing a number of projects. So we could fairly make up for the cash flow shortfall from the JJM projects. The cash flow position from JJM also improved in the month of January, February, March. So it has the cash flow position of the company, it has improved significantly. If I say there were some funds which were released on 4th or 5th of April, rather I will say these funds were to be released by 31st March. So these got delayed by maybe for 3-4 days. If we just compilate these numbers, so you can just conclude that we are OCF positive. So that way we have been fairly comfortable. The funds flow have been comfortable in the company for all the projects wherein we were executing. And the similar condition seems to be there because government is proactive and the funds are getting released in the projects.
Right. Mr. Jain, very quickly, order inflow guidance, number one, private versus PSU, and number two, export opportunities, especially we understand you're looking at orders coming in from Saudi. Can you quantify it as well?
Basically, our order book currently is from the government projects, from the various government initiatives. It is basically under JJM, Amrut 2 and Namami Gange.
Right.
I give the order split right now under JJM. My current order book is around 175 odd crores. Rest of the projects are under Amrut and Namami Gange. So there the fund realization was better even in the last financial year. Now coming to these around 200 crore odd projects which we have backed in this current financial year, they are again these sewage treatment plants and one water treatment plant, which is around 70 crores. So that way our order book is more inclined towards the WWTP projects, which is sewage treatment plants and common effluent treatment plants. So going forward, we are the projects which we have submitted our bids. These are again more under this Amrut 2 and Namami Gange. We are not bidding in JJM. So the orders inflow are expected to be in the range of around 1,200 to 1,500 crore from our current bids which we have submitted. And going forward on a quarter-on-quarter basis, we can expect that yes, we can close this particular financial year with an additional order book of somewhere in the range of 2,500 to 3,000 odd crore.
Understood that. Lastly, unbilled revenues, we understand that was close to almost 25% of the total operating revenue. Where does that stand currently?
The overall unbilled revenue position in our books is 265 crores. And if I calculate in the number of days, it comes out to 91 days. So a guidance of somewhere around 90 days of the unbilled revenue, it can be there in the books. And I think we are pretty comfortable on this.
Sure. Thank you so much, Mr. Jain, for joining us and giving us some perspective on how your numbers were and what is the outlook going forward. So that was the management of Enviro Infra. As of now, the stock is trading with a gain of nearly 0.4%. But let's also focus in on some industrial stocks. GE Vernova, this stock, Vivek, has been doing exceptionally well throughout this week. In fact, this week itself, that stock is up almost 23%. Hitachi Energy also has managed to hit an all-time high. Week to date, it is up almost 10%. Other stocks that are moving around in trade include Kirloskar Oil as well as Transformers and Rectifiers India. But with that, that's all we have on this edition of Midcap Radar. Don't go anywhere because MF Corner comes up next.